Good morning, it's February the 5th, it's Monday. Hope you've had your coffee, maybe 3 shredded wheat, whatever you need to do to hit this week absolutely full on. This is currencytransfer.com's morning market update. So the headlines are sterling is slightly lower across the board as it awaits Thursday's Bank of England meeting. The dollar rallied on Friday afternoon following the non-farm payrolls, and political concerns are coming out of the Eurozone. So for the UK, after Governor Carney met with MPs and delivered a fairly upbeat message about wage growth, we are seeing more and more commentators calling for a UK rate hike even as early as May. Indeed, last week, as a result, we saw sterling drive forwards about 1.5% against the US dollar. And although it trimmed things slightly on Friday with the non-farm results, we are still seeing good value for cable. However, the data doesn't really support a hike so soon. On Friday we had construction PMI data, which has joined manufacturing data in falling slightly short of forecasts, and indeed today the market seemed to be fearful that the PMI services data will follow suit and complete a trio of missed forecasts. Obviously, PMI services represents a much more significant part of the economy, so we may see a fairly choppy day for sterling depending on how that data comes out. Looking forward to Thursday, obviously we have the Bank of England MPC meeting. We've also got a double whammy with the quarterly inflation report due out as well. General consensus is for a 9-0 vote for no change in interest rate policy, although it'd be interesting to see whether or not one or two of the perennial hawks do change that and perhaps make it 8-1. Friday it was all about the non-farm payrolls in the US, and indeed they didn't disappoint. They delivered a strong 200,000 new jobs created. Obviously that means that I overcooked it in the sweepstake. 210 was a little bit too aggressive, and it means that I didn't take the pot. That's a £1 contribution that I'll never see again, but you live and learn, and on to next month. Looking ahead, the data is now supporting the view that the Fed will raise interest rates even as soon as next month. And this confidence may well be bolstered today when we see that non-manufacturing ISM data, if that comes out and posts a strong result as is forecast, then we may see the dollar increase off the back of that. Over in the Eurozone, the shift is moving from economic data across to a more political focus. The two main areas of concern there are the German coalition talks and the Italian election. In Berlin, Martin Schulz, the leader of the second largest party in Germany, and Chancellor Angela Merkel failed to find any kind of resolution before their self-imposed deadline of yesterday. It's currently in balance, and seems that if one or other side doesn't radically shift their position, the natural result may well be for another German election. Which brings us through to Italy. They do have an election next month, and one of the front runners there is standing very high and gathering support on both an anti-EU and anti-Euro platform. So that's obviously going to get a lot of negativity coming through. The more support that garners, so we may see the euro sell off accordingly. The only other relevant news of the day is related to Leeds United. Of course, we're the global payments partner of the club, and it was very sad to see Thomas Christensen leave the club over the weekend. But every cloud has a silver lining. My CV's in the post, and we'll see what they make of my managerial acumen. All the best. See you tomorrow.